So number 5 is going to be the NACA program. And NACA is really for those with a low to moderate income. They actually prioritize those with a lower income. And some of the benefits about this program is, of course, there's no down payment. There's also no closing costs. There's also no monthly mortgage insurance. So this is really going to help your monthly payment. This can take off hundreds of dollars a month on the monthly payment. They'll also give you a below market interest rate as well. So the interest rate is not going to be higher on this type of loan. Now let's go over some of the cons. So this program, it's a pretty lengthy and intensive process. So if you think that going to the bank and getting approved is overwhelming and hard enough, this program is about 10 times worse than that. The reason is there's a 10-step process. You get assigned to a lot of different people. You have a lot of different counselors. You have to give them a lot of paperwork up front, and you have to attend several different seminars and education seminars, which is good. But if you're needing to buy a house within the next couple months, this is not going to be the program for you. Now, it is a lot stricter when it comes to debt to income ratios, so you won't get approved for as much when going through this program as opposed to other down payment assistance programs. There's also location restrictions, so you want to make sure that you know upfront the area that you're going to be buying is. If you're going with the NACA program, you need to know that it works within the areas. And also, not all of the money that they give you for the down payment and the closing costs are forgivable. So make sure you know upfront what you're getting into. If it's not forgivable from day one, when does that come forgivable? Is it 5 to 8 years, or is it ever forgivable if you ever sell or refinance? These are the questions you want to ask up front. Now let's go over number 4. So the Chenoa Down Payment Assistance Programs is going to be used with an FHA loan. So you're going to have to get approved by FHA guidelines in order to use this program. Now, some of the pros of this is they're going to give you anywhere from 3.5% to 5% of assistance to use. 3.5% can go towards your down payment. Then you can use the rest 1.5 to use towards your closing costs. So you have flexibility in this. Also, what's really powerful about this one is there's no income restrictions. A lot of them, including the NACA one that we just talked about, have income restrictions. This does not. And your credit score minimum is going to be around a 620. Now, another powerful benefit is you do not need to be a first-time home buyer on this, so it's going to open up a lot of your options, especially if you yourself are a first-time home buyer, but the co-borrower that you have is not. This is going to be a good program that you can utilize where it doesn't exclude having the co-borrower on there. Now let's go over the cons. So this program, it's really going to be a higher interest rate up front than if you did a normal FHA loan and brought your own down payment. So it's really important that you look over this, you look over the monthly payment and compare your options, see if it even makes sense. Also, it's not forgivable starting day one. So the money that they give you to cover either the down payment and or closing costs, there's really 2 different ways you can structure using this program. Number 1, they have a repayable option, which the money that they give you is almost like a second mortgage or a second lien, and you make small payments on the money. Let's say they give you $15,000 to cover the down payment. You'll be making payments on that $15,000 in addition to your monthly mortgage payment. Also, they do have a forgivable option, but again, it's not forgivable from day one, and it's broken down into 2 ways. If you take just 3.5% for assistance, then that it turns forgivable after you've made 36 monthly on-time payments. If you took 5%, that gets forgivable after you made 120 on-time payments. So it's important that even though they say it's forgivable option, it's forgivable after a certain period of time. Number 3 is the USDA loan, and this is a government loan that's for those that want to buy a home outside of the city limits, so in rural areas. And the benefits of then is, so the down payment, there's no down payment that's required. It's 0%. So it's not like you're having to take on any assistance or have a second lien on the home. It's truly 0%, 100% financing for this loan. There's also no monthly mortgage insurance, so it's really going to help keep that monthly payment a lot lower. The minimum credit score is going to be around 645, and also with this loan, you're going to get really competitive rates. A lot of times it's a little bit lower than conventional or FHA. And this loan, it's also very easy to refinance later on down the road. If you ever needed to refinance, it's a very simple process when using a USDA loan. Now let's go over the cons of this loan. So some of the downfalls when it comes to using these programs, number 1 is they run out of money, and a lot of times quickly. The reason is they are only allocated a certain amount of funds through either the state or county entities, and once those funds runs out, that's it. They don't replenish until maybe the next year. And you cannot reserve these funds until you've actually gone under contract. And if you go under contract and it runs out of money, you haven't reserved the funds, then you're out of luck. You either have to scramble to find another down payment assistance programs or try to come up with that down payment itself. Also, you generally speaking need a longer close time because you're having to deal with like state and government programs. So a lot of times their bureaucracies that they have just takes at least 45 to 60 days closing. And they're not always forgivable. So you want to make sure that you read the fine print up front to make sure that, is this forgivable after a certain amount of years? Is this forgivable? Am I going to be repaying this on a monthly basis? So you want to make sure, even if they use the term forgivable, that you know what that truly means. Also, a lot of times they have stricter guidelines. You might have to meet guidelines not only with the bank itself, but with the county or the state program that you go with. Now let's go over number one. And then number one is going to be the Empower DBA program, and this is one of the very few that I have found that's actually a true grant. And this can only be used with an FHA loan, so you must meet FHA guidelines. Now, some of the pros is they will give you 3.5% to cover the down payment. And again, this is true grant, so it's forgivable starting day one, so no repay back is required. So you could literally sell the house the next day or refinance the next day, and the money that they give you for the down payment assistance doesn't need to be repaid back. A minimum credit score is at least a 620. There's also no income restrictions on this, and this will work as long as you have at least one person that's a first-time home buyer on the loan. Now let's go over some of the cons. So when using a down payment assistant or a grant program, it really only makes sense if you either don't have the funds for the down payment or the down payment is going to wipe you out completely. So an overall strategy to use, especially with this Empower grant, is use the grant to get into the home. Then because it's forgivable starting day one, so you don't have to repay the money back that they gave you for the down payment, later on down the road, because it's a higher interest rate, refinance to a lower payment, and that's how you can use the grant program to buy a home and then lower your payment later on. So if you like this video, then you're gonna love the one that I just put out on why your mortgage payment can increase after you bought the house.